Read the question carefully and then press pause. Carry on as soon as you're ready to hear the answers. So the gross profit ratio. Well, the gross profit is the sales minus the cost of those sales, the COGS, which is 150,000. You then divide 150,000 by all of the original sales, 200,000, and multiply the answer by 100. And there it is, 75% is the gross profit ratio. So the net profit ratio, well, the net profit is the sales minus the cost of sales and the expenses, sometimes called the fixed costs. So it's 200,000 minus 150,000, which leaves 50,000. And then you divide that, because that's the net profit, 50,000 net profit, you then divide that by the original sales to get the ratio and multiply by 100. So it's 50,000 divided by 200,000 multiplied by 100, which is 25%. So for 2018, the gross profit is 190,000. That's K, 1,000. Don't write K in the exam. 190,000 divided by £250,000 sales, multiply that by 100, you get 76%. So the net profit for the business is 80,000, and we work that out by starting with 250,000 sales minus the costs of goods sold, 60,000, minus the fixed costs or the expenses is 110. So do 250 minus 60 minus 110, you get £80,000 net profit. Divide that by the original sales of 250,000, 80 divided by 250 multiplied by 100, or 80,000 divided by 250,000 multiplied by 100, 32%. Here's an overview. Gross profit and net profit are both types of profitability which are a measure of how well a company is doing, how successful it is. Do you remember the magic formula, sales minus costs equals profit? Well, that was like the baby version of the formula. Now that we're at the end of the course, here's the more advanced one. So there's two halves to the formula, which are in the top two boxes you're looking at, and then my summary at the bottom. Here we go. Sales revenue, the money that customers spend with you, the value of the goods and services that you make from customers buying your products, minus the cost of each product that you sell. That can change. The more you sell, the more it costs. If I make 1 biro, that costs me 2 pence in plastic. If I make 10 biros, it costs me 20 pence in plastic. That's why it's called variable costs. Sales minus COGS, costs of goods sold, equals gross profit. Gross profit minus the other costs, rent, electricity, utilities, water, advertising, equals net profit. At the bottom, I've combined both of the top two boxes into one. Sales minus COGS equals gross profit. That's just what it says at the top. Gross profit is in blue to show you that that is the end of one formula and the start of another. Sales minus COGS equals gross profit. Gross profit minus expenses equals net profit. Gross profit and net profit will be expressed as currency, so pounds or euros or dollars. But gross profit percentage, net profit percentage, to calculate those, you just take the gross profit and divide it by the original sales. Multiply by 100, that's your gross profit percentage. Net profit divided by the original number of sales, the value of the sales, multiplied by 100 is the net profit percentage.